Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. It's been a while. We've been on Philippines to give a trading seminar, a few interviews, but now we are back and we have some decent trading occasions for you. The market maybe is not so great as before, as a few weeks ago, but still we can see some interesting trading ideas. First, we will start with the calendar. This week, well, it's quite busy, even for the fact that yesterday we had a Labor Day in most of the countries. So the liquidity and volatility wasn't so big, but apart from that, we can see that the market is quite busy at the moment. We just got a data from Eurozone, GDP from Eurozone, which came better than expectations, so 0.6 on a quarterly basis, and on a yearly basis 2.7 instead of 2.5. So these are good numbers, which should vastly help the euro. Actually, let me see if the data help the euro. Euro cut, not really. Euro to British pound, not really. So it's not in good shape even after this data. Let me see the euro dollar. Not really. This data failed to help euro to climb higher. Let me come back to the calendar, because what we still have here is FOMC interest rate decision. As you can see, we're not expecting changes in the interest rate decision statement. Rate decision, and this will be 9 hours, definitely should bring us volatility, especially on the pairs with American dollar. That will be definitely an interesting situation, interesting market conditions to be in. As for tomorrow, what do we have tomorrow is CPI from Eurozone. So I think CPI is even more important than the GDP. So all eyes will be on CPI from Eurozone. Then PMIs, we have PMIs from United States. And as it is the first Friday of the month, on May 4th, we'll have non-farm payrolls. Non-farm payrolls which lost the relevance recently, and our attention is shifted towards the CPIs. I don't think that people pay, well, they do pay attention to CPI, to non-farm payrolls, but I think that the main focus is on inflation right now, because inflation is the main factor for the interest rates. And non-farm payrolls, everybody looked at non-farm payrolls because we were trying to estimate the recovery of the economy, and we all know that the economy recovered. And now the biggest concern is if the economy is too fast, and we can see that we can stop that. We can stop the economy from going overheated by rising interest rates. And we do that by looking at the inflation. So that is why inflation is the factor that everybody's supposed to look at. That being said, from the fundamental point of view, it's it. That being said, let me move to the macro calendar. Actually, we can start with euro dollar, because euro dollar broke the long-term support, this one and this one. This is big. Actually, breaking the orange support is that was a big thing, definitely. But breakout of the green one is even bigger, because breakout of the green one triggers us a strong sell signal, aiming at least 38.2. So the price should get to 38.2. Actually, giving us an excellent trading signal from the risk to reward ratio perspective. So the stop loss should be like 80 pips above the green area, and the potential target is 300 pips. So you can see it's almost 4 to 1. Definitely that's a desirable risk to reward ratio, and this trading occasion looks decent. When there is a buy signal where you can see this horizontal, this lower line of the flag here, upper line of the flag, I was thinking that the price would like to test the green area and the long-term downtrend line, but the price is not doing that. So I would have two selling places here. The first one would be below this line, and the second would be here. So these are the places where we can expect a reversal, a drop, a breakout, or a bounce. So definitely the sentiment for euro dollar is negative. Now British pound to Canadian dollar. What we have here, I was bullish here. I was bullish here because the price was here on the horizontal support, on the lower line of the flag, and on the long-term uptrend line. That was a great place to buy. The price even created a short-term reversal here, but then broke this support, and that actually triggered us a very important sell signal on British pound to Canadian dollar. Now what we are seeing is a reversal movement. Most probably we'll see something like that, which actually will be a great occasion for the sellers to reopen their short positions with better prices. For those who missed the initial movement, this is the most probable scenario here, that the price will do something like that. I was bullish here. I even opened this order on my trading account, but it got closed on stop loss. Sometimes it happens like that. Dollar index is making a correction quality pattern. Dollar index is testing 61.8. But the dollar index broke the 50% and denied this shooting star. So dollar index is in a bullish situation right now. What we can have here is to test the recent broken resistances, closest support. This can be the scenario here in this case. So dollar, suppose like it looks like dollar will be stronger in the next few days or weeks. British pound to New Zealand dollar, what we have here is a double top formation on 38.2. In theory, that should be a super strong sell signal, especially that the candle from the last week is a shooting star. So double top on 38.2, second top is a shooting star. This is huge. What I'm missing here is the breakout of this lower blue line, which you can see is super important. And a breakout of this lower blue line, actually I need to change the color to make it more visible here. A breakout of the red line will be super strong sell signal. But even if you won't wait for that, selling here, stop loss here, 460 pips stop loss, that's a lot, but almost 1000 pips profit. Not the best risk to reward ratio, but still significant. If you want to play safe, the take profit is here, so 2 to 1 in terms of the risk to reward ratio. British pound to New Zealand to Australian dollar. Here we also do have a sell signal. As you can see, for the past few weeks, the price was locked inside of a sideways trend, resistance, support. The price broke this support and then is testing that as a closest resistance. I think that with this candlestick like that, with this H4 candle, the price coming back above is very, very probable. In theory, that should deny the sell signal here, but in my opinion, the sell signal is still on the table, at least till the price will touch the red line, the red uptrend line. So we do have a very short-term buy signal, we do have a mid-term sell signal, but we do have a long-term buy signal. In this case, that's not the best place to be. What I like to do is I like to trade in places where everything looks great and everything is pointing at one direction. Here, not everything is pointing in one direction. We have a uptrend, downtrend, and uptrend again. Let me see Australian dollar to New Zealand dollar, where in theory we do have still an uptrend. In practice as well, actually, the price is defending horizontal supports. That's a sideways trend from the end of April. There is no trading signal here yet, but if I had to trade, I would go long, because as you can see, the price defended the super important horizontal support on 1.066. With this candle from overnight, it looks promising for the buyers. Now let me show you indices. S&P 500 is having a sideways trend, so nothing special. We are above the uptrend line, the long-term uptrend line. We are below the mid-term downtrend line. This is not a good place to be. Then FTSE after this false breakout signal here is just going higher and higher, obviously with a little help from a weaker pound, because there is a correlation like that here, that if the pound is weaker, FTSE is stronger. This is a very strong upswing. I think we should get eventually a correction. Maybe this area here will be a good place for a correction. Bitcoin is frozen for the past few days after they made a kind of a false breakout of this $9,000 resistance, but now the price is creating a pennant formation. A pennant formation is a trend continuation pattern, and we should eventually see the breakout of the upper line. Well, we do have this resistance on $9,000, but as you can see, it seems that this resistance is not working properly, because it's not stopping the price. The price is moving, let's say, freely in this area, which opens us a way for a test of $11,200, $11,500, and this red area is an ultimate resistance for the Bitcoin. But currently I'm quite positive about the sentiment on the Bitcoin, and I'm quite positive about the future movements here. American dollar to Singaporean dollar, that was awesome. The price defended this horizontal support and dynamic support, broke the mid-term downtrend line, broke the long-term downtrend line, broke the horizontal resistance, then we used that as a support, and then we went significantly higher. Now we are meeting the first horizontal resistance where we can expect taking profit action, but price closing above this resistance will trigger us another buy signal, and this buy signal should aim here. American dollar to Danish crown. Here we broke from the sideways trend. The price went significantly higher. That was a great buy signal, which we were telling you about before. The price broke horizontal resistance here, and now the price is testing the correction equality pattern. So this correction is the same as this one. I think that this kind of a movement would be more than welcomed here by the price action traders. And this kind of movement would be very technical. It would be, well, it would be just nice to see if the price would move very technically like that. Next one is New Zealand dollar to Japanese yen. There was a beautiful buy signal after we defended this horizontal support. Then the price bounced from the horizontal resistance, and then we broke this meter map trend line, but I don't think, well, it was relevant because the price went lower. But now we are testing the previous neckline again. Left shoulder, head, and right shoulder. That was a neckline, broken resistance, tested as a support. That was a beautiful buy signal. This neckline acted as a support, and after the breakout, it acted as a resistance here overnight, and now we're trying to break it again. It looks like the Japanese yen will be a bit weaker in the next few days, yes, in the next few hours. So we have a chances for a reversal here too. American dollar to Canadian dollar. Well, that's a boring sideways trend, unfortunately. The price was trying to create a head and shoulder pattern, but now we're having kind of like a triple top formation. The thing is that as long as we stay above the the blue area, there's no sell signal here. The price closing below the blue area will be a legitimate sell signal, but so far chances for that are rather limited. If I had to trade this, I would rather no. I would rather not. What is interesting here is that price is respecting 23.6 and 38.2. If I had to trade, I would definitely open a sell stop trade here. What about the buy stop? I'm not convinced because the resistance is too wide. Even if the with the breakout of 23.6, we still have those highs which can result as a resistance. So the area for the pending order is too wide. It's 40 pips, and for the American dollar to Canadian dollar, 40 pips is quite a lot. WTI is climbing higher, making those trend continuation patterns. So upswing, wedge, upswing, flag, upswing, wedge, upswing, and now we had a pennant. But I think I have to readjust this because here I think we have another flag. We bounce from the lower line of the flag. We're above the horizontal support here, horizontal support here. It looks like a bullish situation here. So we should see the breakout of the upper line of the flag and the breakout of the horizontal resistance there. DAX is triggering a buy signal as we speak. So DAX is climbing higher after DAX defended the 11,900 points support. This is a legitimate buy signal that we are warning about for a long time. The thing is that we on the horizon we are getting closer to this resistance points, which was with us since October. So that is a legitimate buy signal, but the thing is that risk to reward ratio here is pretty bad. So if you think about chasing this trade, I don't think it's a good idea. I think that the risk to reward ratio here is not so good. So maybe if we'll go like here, this will be a good occasion to buy. As for now, I don't think so. Canadian dollar to Japanese yen. Everything seems to be stronger against Japanese yen. The situation here was nice when the price was breaking this neckline of this head and shoulder formation, but now this situation is not so good for trading. So what I'm gonna do is just delete this. There is a super strong sell signal on Australian dollar to American dollar, but the thing is that it's a long-term sell signal, so I don't think if traders have enough patience to trade this, because there is a downtrend, there is a flag met an ultimate horizontal resistance here, bounced from it twice, the last time at the end of January. Created a channel down formation. Now the price is and broke the lower line of this flag of this channel up formation, and actually sell signal was triggered here on 23rd of April. Now it is a bit too late to enter with a short position here, but as you can see there is a horizontal support. We are on a horizontal support as well. I would not mind if the price would do something like that. I think that kind of movement would be very technical, and I would love to see this. Euro to British pound. I think that this formation that you can see here is very familiar for you. That is a left shoulder, that is a head, and that is a right shoulder. The blue is a neckline. The thing is that this formation is happening on a long-term horizontal support, and I would love to see an upswing from that. But the thing is, I'm a bit worried with the price action here, right? Because obviously we can't put a neckline like that. That it makes no sense, more sense. Here left shoulder, head, right shoulder, breakout of a neckline. Neckline is tested as a support. But what is worrying here is this drop here. So the price is not like pushing higher after this head and shoulder formation. So my idea here is the price getting there would be the will be a trigger to go higher. Because yes, on the paper it looks right, but look at the daily candle. This is a shooting star, and this kind of a daily candle is not encouraging to buy. I would never buy after a shooting star on a daily candlestick. That is not a good place to do this. So as long as this candle holds here, the decision about buying is a bit premature in my opinion. Now New Zealand dollar to American dollar. This is interesting because as you can see I had a long position here which I closed here with a nice profit, and that was a good call because look what happened after that. Oh my god, that is just a waterfall. So that is a good trading lesson, that once you have a position on profit you should protect this profit because nothing lasts forever, only diamonds, right? So if you have a good trade and you have a good profit, don't be too greedy, don't try to keep this position till it gets to the moon. because it may never happen. The price always can reverse, and the New Zealand dollar to American dollar is reversing. And that is well, that is huge. Now we can see the chance for a correction. I don't think that this correction will be this deep, but maybe we will experience this kind of a movement. Euro to Canadian dollar. Euro to Canadian dollar, after creating this head and shoulder formation, which maybe I will show you better on H4, is having a downtrend, and this downtrend is pretty nice. And also I was having a position here, short one. Downtrend, there's a trend continuation pattern, which is a wedge, which continues the downtrend, and we broke the horizontal support here, and this triggered us a major sell signal. About the potential target of the drop, well, I think that the red area seems like a potentially great place for a bounce. Why? Well, we have a long-term uptrend here, we have a horizontal support here, like a long-term, really long-term. So the price getting there, creating a reversal pattern, like a shooting, like a hammer or a bullish engulfing, will be a great occasion to buy. And now three trading occasions from the Trading Sniper video: cable, British pound to Japanese yen, and gold. First we'll start with gold, because gold finally reached the most important level of the year, $1,307 per ounce. Why is it the most important level? Because the price is bouncing from this level since the very beginning of the year. We did that in January, we did that in February, in March, we did that in March again, and we are doing this now. So as long as we stay below, above the green area, the sentiment is positive, and we should see a continuation of the upswing. This situation gives us a great trade in terms of the risk to reward ratio, because here you risk $10, but you can gain $50. So risk to reward, even 40. So risk to reward ratio here is desirable. So the end of the story is that gold is testing the long-term support. Bullish price action here triggers buy signal, like double bottom like here. Breakout triggers as a sell signal, simple as that. Now British pound to Japanese yen. What we have here is still a sell signal, because the major horizontal support was broken, then tested as a resistance. And now, and also we had this flag, the flag which got denied, because flag should trigger us a buy signal, but failed. So this is a sell signal here. Still, even if when we have this reversal, because this reversal is so far stopping on the first horizontal resistance. The price coming above the green line will be a signal to sell, to buy. But this is less likely to happen at the moment. And cable met a super important, ultra important horizontal support, and dynamic one. This is horizontal from the September and from the January, and this is dynamic from the low since the June 2017. So we have a combination of those two. The price created a hammer. On lower time frame, the price created a double bottom formation here, broke the neckline. That is a signal. Even now, the stop loss is 70 pips, the first potential target is 100 pips. So now it's a bit too late, but we don't have to stop on the first resistance. I think that the price can correct a little bit more from this drop, which had almost 800 pips. right? So this is 23.6, but maybe eventually we can go to 38.2 or even 50% Fibonacci. But the fact is that 23.6 is our first target in this bounce. Okay, thanks very much for watching Daily Analytical Report. I hope you enjoyed this and I hope you saw a few good trades. I did. So now it's time for trading, and now apart from that we are having a short break, half-an-hour break, and after that we are having a webinar, educational webinar. We come back to this as well. So see you in a half an hour, and for now I wish you all the best in your trading, and in the meantime visit our Twitter account and our website alpari.news.